From its earliest origins in the Roman Empire to today's safety nets that guarantee your loved ones have some money after you die, life insurance has been and continues to be an important tool in people's lives. Unlike property insurance, which covers damage to a car or home, life insurance secures your life, ensuring your beneficiaries receive a monetary death benefit when the inevitable happens. But where did this all begin? And how does it really work? Let's begin by unearthing the earliest traces of life insurance all the way back in ancient Rome. Romans had what were called burial clubs. These clubs functioned a bit like modern-day fraternities or social clubs, but with one key difference. Members paid fees to ensure they'd get a proper burial when they died, rather than access to tennis courts or free booze. These burial clubs were an important aspect of Roman culture. They believed that not receiving a proper burial upon one's death would be a bad omen in the afterlife, so burial clubs were more than just social institutions, they were helpful for one's peace of mind. Fast forward to 1583, when the first known life insurance contract was documented in England. It resembled more of a wager than what we see today. A man named Richard Martin paid a premium on behalf of a gentleman named William Gibbons. If Gibbons died within a year, Martin would collect money from 13 merchants. Gibbons did die, just days before the policy expired, sparking a dispute between Martin and the merchants. For more on the history of life insurance, explore the full resources below. But how does life insurance function today, centuries after its inception? Like many things in today's world, you can apply for life insurance within minutes of searching online. You can either explore a scientific company or scour an entire marketplace of companies, all aiming to catch your eye with their benefits. Sounds easy enough, but you didn't come here to be told just to search online for something. How does life insurance work? The central component of a life insurance policy is the death benefit, which is the sum paid to your beneficiaries after your death. The size of this benefit determines your monthly premium, the amount you pay for the insurance. However, the cost of your premium depends on several risk factors. Insurance companies tend to assess factors like how likely you are to die during the policy's coverage period using mortality tables, which outline the probability of death based on factors like age, gender, health, and lifestyle. Here's an example of what one of those mortality tables looks like. Now, if you have pre-existing health conditions, a risky job, or a poor driving record, your premium may be higher because your risk is higher. Even having a recorded history of being a smoker can cause your premiums to go up. Understanding the factors that affect your premium is just one part of the equation. Now, let's explore the different types of life insurance policies available, which play a major role in determining not only your coverage, but also how much you'll pay. Life insurance comes in two main forms, term and permanent. Term life insurance covers you for a specific period, often between 10 to 30 years, and is more affordable, averaging around $80 per month for a $1 million death benefit. Permanent life insurance, on the other hand, is pricier, with premiums ranging from $540 to $700 monthly. But it covers you for your entire life, and typically offers an average death benefit of $1 million. What about extra coverage? Let's say you weren't happy with the basic coverage you were given. You can typically add riders to your policy, which are benefits that come at an additional cost. These may include things like critical illness riders, which may allow you to access part of your insurance money if you're diagnosed with a serious illness. Once a policyholder passes away, the life insurance company releases the death benefit to the listed beneficiaries, who can then use the funds without restriction. Whether it's paying off a mortgage, covering funeral expenses, or providing for day-to-day living, the funds are entirely up to them to manage. It's essential to remember that some causes of death, such as war, terrorism, or suicide within the first 2 years of the policy, may not be covered. So it's important to read the fine print before signing a policy to ensure you understand what's included. For newlyweds, new parents, or anyone thinking of their loved one's future, life insurance offers a vital form of protection. It's not just about safeguarding against financial loss. It's about providing peace of mind for the unexpected, just as the Romans did centuries ago. Now, if you'd like to continue your path toward understanding life insurance, visit the resources below and consider subscribing to our channel for more content like this.